The Global Horizon, a comprehensive guide to the Vanguard Total World Stock ETF, VT. As of March 10, 2026, the global financial landscape has entered a multipolar era. The days of a single market dominating the entire world's returns have transitioned into a more complex, interconnected reality. While the U.S. remains a technological powerhouse, the emerging giants of Asia and the quality hubs of Europe have reclaimed significant market share over the last 2 years. For an investor today, the Vanguard Total World Stock ETF, ticker VT, is the ultimate expression of humility in investing. It is a fund designed for those who recognize that no one, not even the most advanced AI, can certainly predict which country, sector, or company will be the winner of the next decade. By owning VT, you aren't just buying a stock, you are buying the entire human endeavor of capitalism. This researcher's deep dive will break down the total world philosophy, the shifting geographic weights of 2026, and the strategic reasons why this single ticker is often the only investment a person ever needs. 1. What is VT, the everything portfolio? VT is an exchange-traded fund that seeks to track the FTSE Global All-Cap Index. It is arguably the most ambitious ETF in existence. The scale of ownership. As of early 2026, VT holds over 9,800 companies across more than 45 countries. It covers approximately 98% of the world's investable market capitalization. Large to small. Unlike many funds that only buy mega caps, VT includes large, mid, and small cap companies. Developed and emerging. It blends the stability of the US, Japan, and the UK with the explosive and volatile growth potential of India, Taiwan, and Brazil. The Vanguard cost advantage. In an era of high-tech active funds, VT remains a beacon of efficiency with an expense ratio of 0.07%. For every $10,000 you invest, your management fee is a mere $7 per year. 2. The 2026 geographic shift, the multipolar reality. A decade ago, the U.S. made up over 60% of the world's stock market. In March 2026, that global weight has shifted. The current breakdown, 2026 estimates. North America, approximately 58%, led by the AI infrastructure giants of the U.S. and the resource-rich firms of Canada. Europe, approximately 17%, home to the national champions in healthcare, Novo Nordisk, lithography, ASML, and luxury, LVMH. Emerging markets, approximately 11%, primarily driven by the Silicon Triangle of Taiwan, South Korea, and India. Pacific or Japan, approximately 12%, a region that has seen a massive corporate governance boom over the last 24 months, leading to record-high shareholder returns in Tokyo. The self-rebalancing machine. The beauty of VT is that it is market cap weighted. If the U.S. economy enters a long period of stagnation while India booms, VT will automatically sell the U.S. and buy India as their relative market sizes change. You never have to guess when to rotate your money. The world does it for you. 3. The 2026 portfolio, from AI software to physical hardware. When you look inside VT today, you see a portfolio that spans every stage of the 21st century economy. The tech sovereignty leaders. The software kings, US, companies like Microsoft and NVIDIA remain top holdings. In 2026, they are the operating systems of the AI era, providing the software and chips that power global industry. The hardware foundry, Taiwan. TSMC is now a top 10 global holding. As nations prioritize tech sovereignty, the physical manufacturing of semiconductors in Taiwan has become as vital as oil was in the 20th century. The quality and health pillars. The metabolic revolution, Europe. Thanks to the global success of obesity treatments, European healthcare firms have reached all-time highs. For a VT investor, these firms provide a defensive counterweight to the more volatile tech sector. The consumer class, India and Southeast Asia, companies like HDFC Bank and Reliance Industries in India are capturing the spending power of a middle class that is now 1.5 billion people strong. 4. Financial performance, the average that beats the active. In the speculative markets of 2025, many high-risk AI funds saw triple-digit gains, but they also saw triple-digit losses when the AI software delays hit in February 2026. VT, by contrast, provides the smooth ride. Key financial benchmarks as of March 10, 2026. Market price, $124.50. 52-week high, $129.10, reached in late 2025. Dividend yield, approximately 1.9% to 2.1%, because VT holds so many international dividend aristocrats in Europe and Japan, its yield is often higher than the S&P 500 alone. Standard deviation, volatility, VT consistently shows lower volatility than many single-country funds because its losses in one region, for example a U.S. tech correction, are often mitigated by gains in another, for example a Japanese industrial boom. 5. Critical risks, the systemic watchlist. As your AI researcher, I must be clear, VT is diversified, but it is not risk-free. In 2026, there are 3 primary threats. 1. Geopolitical contagion. Because you own the entire world, a conflict in a major shipping lane like the South China Sea or a major energy hub like the Middle East will impact the fund. But because you own 9,800 companies, a local disaster rarely wipes out your total wealth. 2. The US dollar friction. VT is unhedged. This means when the US dollar gets stronger, the value of your international shares, priced in yen, euro, or rupee, drops in US dollar terms. In early 2026, the weak dollar trend has been a massive tailwind for VT, but if US interest rates spike again, this could reverse. 3. The valuation trap. Some argue that by buying everything, you are forced to buy the bad companies along with the good. While true, historical data through 2026 shows that the cost of trying to pick the winners often exceeds the cost of just owning the whole market. 6. Strategy. How to position VT. In March 2026, the smart money is treating VT as the one-decision portfolio, the total portfolio approach. For a first-time investor, VT can literally be 100% of your stock allocation. The core role. Even for sophisticated investors, VT often makes up the 70 to 80% core of their strategy, around which they add small, tactical satellites like gold or Bitcoin. The buy on dips indicator. With the fund currently trading near $124, a pullback to the $118 to $120 range, a 5% correction, is viewed by many 2026 analysts as a generational buying opportunity. The simplicity premium. The greatest benefit of VT in 2026 isn't just the return, it's the mental health. You don't have to check the news about the Chinese property market, the US election, or the European energy crisis to know if your portfolio is safe. You own the world. If humanity is making progress, your wealth is growing. Conclusion. The Human Index. The Vanguard Total World Stock ETF, VT, in 2026 is the ultimate bet on human ingenuity. It is a fund that rejects the idea that any one nation has a monopoly on the future. By owning nearly 9,000 companies across the planet for a fee that is essentially zero, you are positioned to capture every breakthrough, every dividend, and every expansion of the global middle class. The verdict? If you are a long-term investor who wants to set it and forget it, VT is the gold standard. It is the only investment that guarantees you will never miss out on the next big thing, no matter where in the world it happens.